Hi guys, welcome to another episode with Kizo Forex. So today we'll be discussing about market structure, and this is an important course for us as a trader for us to cover. So we all know in the market we always have a buy momentum and a sell momentum in the markets. So if for us to have those sell momentum and the buy momentum, we always know that it is going to create what? A structure. Why? Because it is a trend. If there's a sell, the market will be going down. If it's a buy, the market will be going up. So for us to identify how to follow up in the trend when it's selling and how to follow up when the market is buying, we need to identify them because it plays an important role for us as a trader in our career to be able to participate in the market movement. So we can see in the diagram here on top I have here, which is the bearish trend identification here. We have on my right side here with the bullish trend identification, and also we have the consolidation, the raging market. So we all have here in the bearish trend. So whenever the market is going down, the market doesn't move straight down on a straight line. It has to create series of what they call lower low, lower high, lower low, lower high, lower low, lower high. So the market has to go low for it to come up to create a lower high, which is the buyers are trying to buy, but the sellers are staying powerful and having a powerful momentum and brings the market down. Now, for you to know if this is a bearish trend, you will know why, because after we have a lower low that was here, we had a market going up, which was creating a lower high. Then we now have a market coming down here, breaking this last lower low. So for you to know if it's a downtrend, a bearish trend, it has to always keep breaking your lower low for you to know that yes, this is my downtrend, which is my bearish trend. Okay, so it has to be breaking, create and break. If it doesn't break, it is not your bearish trend, right? So it is going up, coming down, going up, coming down, going up, coming down. It's the same that goes for the bullish trend for the buying side. So you could see here, the market has having a higher high. This is high and higher low. So it must always have a higher low and higher high. So this was the higher high of the previous market. So the market was going down, which the seller were trying to have the momentum in the market. Then all of a sudden, we have a higher high. So you can notice it broke this last high, right? So that is what it's showing you that this market is what a buy trend, which is a bullish trend. Yeah. So you can see it broke, even coming here again. It came down and also what broke the last high that was here. Now it is showing you directly that this is what a uptrend, a bullish trend. So it keeps breaking up for you to have a what a uptrend, which is the bullish market. So you can see here, it's always have a series of higher highs and series of higher lows, and they're always broken on the upside. Did you get me? So this is how to identify your bullish trend and your bearish trend. Now, this is the consolidation ranging market, which we all know as sideways market. So the market is just having high, low, high, low, high, low in one direction. You can see it's inside this white box, which is not able to break out going up or break out going down. Because if the market was able to break down here, then we know we're having a trend in bearish markets. But if it wasn't going down, it was going up, what would we say? It was a bullish trend because it has broken all this, you understand, and showed us that it is a bullish trend. But now this one is just a consolidation. There are markets that are just battling each other but not showing who has the highest momentum in the market. So that's why you can see most of all this will appear in the reality charts whenever you are trading. That is why I had to design this other main factor of identifying your bullish trend and your bearish trend. So this is what you'll be seeing specifically in the market, not this beautiful way. It was so easy like this. This is exactly how you'll be seeing your lower highs and your lower lows, your lower highs and lower lows. Why? Because the market's view are always displayed in different varieties. In sense of we have the daily view, we have the 4 hours view, 1 hour view, 15 minute view, 1 minute view. So you can see definitely in this position here, you can see here could have been in your 4 hours time frame, which we call it. You could see it was as easier for you for identification, but you come here, you see a little bit of consolidation, and you are wondering, where are all this coming from? So exactly, this is how to identify them in your chart. If you are being confused, if you can't identify them as easy as this. So if you notice here, I always told you that it must always break the last lower low. So you must always be able to identify your last lower low, right? So you can see the market was going up and going down, came up, creating a lower high, and came down by breaking this one. It must break the last lower low that pushed the market up. If it doesn't break it, it is not yet. So these are all this one that was designing here. That was not what breaking it. So all this one are the consolidation. And those this one we call it consolidation maybe in the 15-minute time frame if you are using a 4 hours time frame to trade. So we have the market also doing what? Doing the same thing here, jumping, going up, and also came down and breaking this one. Yeah. So we have our continuous lower low, our bearish move continue. Because if there's no break of structure in the market, we call all this break of structure. We call this BOS. BOS. So anywhere you see it breaks it, they are called what? Your break of structure. You must know that it is called your break of structure. Because if it doesn't break it, you can't identify it as a break of structure. So it is always breaking. You see, it break it out. You want to go, it break it. It must break it. So these are called your break of structure. Are we? Now you can see it also come here and what? Break it. It broke your lower low. So as you can see, this is as easy as to identify it in your market. Are we there? Now look at here in the same as it goes for the bullish trend. Your higher high has been broken. Your higher high has been broken, creating a new what? Higher high. So it must always be broken. Exactly like that. So it must be broken. Now, if you notice, when we're having all this, why did I not mark this one as my lower low? Why did I not mark this as my lower low or this one as my lower low? It is the completely the lowest one, the lowest low you must mark. All this one were just ranging, but it was not the last one to push the market upward. So you can see it was this that pushed the market upward for you to have what? Your continuous higher high in the market. So exactly as that. So this is how you identify your market structure and you are able to understand the market movements whenever you're in the trade. So let's go into the live trades. So you can see here, this is blank and it is my 4 hours time frame. So we go up to see here, what can you say in this position we have from this zone here? I will mark from this zone to this zone. Good. So we all could see here, the market was what? A bearish trend. The market was what? A bearish trend. This is a bearish trend. Yeah, because the market is creating series of lower highs and lower lows, and the markets are what? Falling down. So you could see this was your first position, having it here. creating your first break of structure, which is on this side, because after here, it came down to this position, came down to this position, creating your higher height, and now to break. So as that's broken, we need to find our what lower highs and lower lows, because this is now your what the new lower low, the new lower high. So as the market is going down, is now up here. For here, as we identified as your lower low, we know the market will go up and will come down again and creating a what lower low again. So the market has now what be going up. You could see it's having all this ranging movement, but in all ways, it still what came down here, breaking this guy and pushing the market downward. Are you seeing what I'm doing? So it's going up here again as your lower high, coming down to break again. It must always break the last one. So it comes up again and it must not break this one, the higher high. So it comes here and breaks this one. So it comes here and breaks this one. These are your series of lower highs and lower lows. Now, if you notice, the market in this position here broke this lower high, and you keep asking yourself, why did it break it? It should have continued going down. Now, this is what's in a shift in the market. This is what's in a shift in the market, and this is what they called change of character. Now, it is called a change in the movement of market. We have been having market which is called the bearish market, right? Now, if the markets have broken your last lower high, this is a what? A sell momentum. It is now called change of character here and market here, because it broke your last lower high. You know, the markets are not meant to break your lower highs. They're only to break your lower lows as a bearish market. For it breaking it, this is called a change of character. So which we have it in short format, CHO. This is change of character. Now we now know that the market is having what? A bullish market, right? So after having it, if we need before we could say it's a full bullish market, it has to have what? A continuous trend in the market moving direction to the bullish. So it has to come down and what? Go up again. Before we could say what? Hold on. Yeah. That was your last lower high, last higher low. And now we have what? Our bullish trend in the market. So this is how you identify your market, so you can be able to join the trend and continue trading. So if you are able to identify the trends, you can be able to join in the market. So take for example, as I've said, in the bullish market here, this is where you have your what? Your first lower low and lower high. So if we could take it to the lower time frame for us to join the market. So I've marked this one so I can see where it is on the lower time frame. So 15 minutes. Let's go to the 15 minutes. All right. Let's see where we are in the 15 minutes. All right. So you can see they are giving you opportunities of you joining the market in the trend. So if you can zoom in into the lowest time frame, you can see they have opportunity to join them in the trend. So instead of you just jumping into the market anyhow, you know where to pick your entrance from, right? So when the market adds break here and break, so you know this is what it broke here. So after breaking the market here, hitting your break of structure, your lower low here, we all know that this is a valid position for you to join the market to continue your sell trend. Now you can see you pick your trade from here, and now boom, see the massive profit you have been making. See this downtrend for a whole couple of days, and you are done for the market. So it's as easy as that to identify your markets. If you are able to identify your market, it will be as easier for you to, to dive into the market with no stress. So that's it about the market structure. Alright guys, see you in our next video.